Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday UTC. A big shout out to everybody that's joining the stream today, and also a big shout out to everybody that's going to be watching this on recording. Hey buddy, burned. Craig, who's in the house, unfortunately had to leave for an ill-timed meeting. Hope you hear this on Catch Up, Craig. Always a pleasure to have you on the show. Sebster, good morning, mate. Really lovely to meet you in London. Always good to put a face to the name. And Nipar, everybody's rolling in today. Really good to see you all. Hope you're all doing well. Thanks so much. And you are back again, Really do appreciate that. Apologies for the technical issues yesterday, guys and girls. It was just one of those things, unfortunately. We couldn't get it working, and the problems persisted all day. Hopefully, it should all be fixed now. So, any issues, do please let me know. And apart from that, we're going to rock on and get into the charts. C-Ron, my man, how you doing? Another legend from London. Really, really awesome meeting you guys. It really, really was. So let's start by making the screen a little bit bigger. I've just got my ES chart up on here, something I've just been looking at this morning. So while I'm just going into this, may as well just kind of like plug you into my thoughts on this, really, because obviously we've had some nice trading on ES, so traditional markets. This is the smaller contracts of the S&P 500. But crypto's been very, very flat right now. We have got a pretty news-driven week. I think we've got Powell speaking today. We've got Powell speaking again tomorrow. We've got non-farm payroll coming up towards the end. We've got China, PPI, I think, as well. And we've also got the Eurozone GDP. So there's a lot of potential points at which we can get some volatility injected into the market. Sorin, hey buddy, good to see you. Good day to you too. So the reason I'm looking at ES at the moment, I know the correlation flits between the two. So I think when you see traders talk about using using things like ES, NASDAQ for correlated assets, when you look at the correlated assets like the DXY, what you're doing those is you're not just kind of seeing the DXY run hot and thinking, right, I'll just short crypto. You're kind of just putting a story together, right? So, I've always found that kind of talking myself through everything makes a really big difference. Kelly, hey bud, all the way from New Zealand. I hope things are treating you well out there. What a pleasure to have you guys all on the stream today. Thank you so much. So really, I kind of thought today maybe we'll kind of take a look at some key levels, but really, I kind of wanted to run you through my thought process, really, something I don't see a lot. Obviously, we do it within the group because we train people how to do it. So it's a very structured, focused approach. The bits and pieces that get shared on like YouTube and Twitter and stuff like that, it's difficult because they're only like snippets, right? So I thought maybe it would be kind of insightful to see how I would kind of just look at a chart, how I would run sort of a top down on there, how I would build my kind of bias. As a low time frame trader, obviously, I'm looking really focusing on the daily and down in terms of what the draw on liquidity is. So hopefully that's of interest to you guys. If you've got any questions and bits and pieces as we're going along, then please don't hesitate to throw them in. I mean, we can do this as well just on we can just do this on a random crypto asset if you want, and we'll strip everything off the chart and we'll just go completely top down from a blank chart. So does anybody have anything that jumps to mind that they'd like to cover? Give it a couple more seconds in case. If not, let's have a look at what we've got. I think I've got a lot of data. Sol and Nipar is in there for the win with Solana. So let's do that. And cool. They're all flying in now. Okay, well, let's do. I know Wednesday's usually our kind of alt request day. So let's do a few top downs, right? We'll kind of use Sol. Imran Khan, my man. Good to be here after some technical issues yesterday. So let's start with Sol. Let's see if I can do this in more of a timely manner, right? And then we'll get through a few different assets. If you've got anything particular, that you have question-wise and bits and pieces, we've got another shout-out for Matic, so do let me know. We've had a couple of those now. And we'll just rip through them. Any questions and bits and pieces you've got, guys, please do feel free to ask them. Just going to that out. Clean this chart up. And then we'll start with a nice clean chart. Here we go. Right. So first thing I'm doing on this, right, is I'm starting on the weekly. On traditional market assets, I would typically start higher, start at a yearly, and then move down through the quarterly, the monthly, etc. Obviously, your crypto assets depend who you trade with as well. I trade with Bybit. So for me, this is the data I'm interested in. Obviously, these are the futures charts as well. If you're looking for kind of longer term PA spot positions and stuff, try and get as much information as you can. Some of the older Coinbase charts and bits and pieces do go back a longer way, and you can find some of the index charts as well. Because you're obviously missing historical price action back here. For how I trade, it's, I'm very, very interested in recency, right? So I'm taking day trades. So this kind of price action means the most to me. If you're swing trading or position trading, obviously this becomes really, really super important. So with the information that we've got on here, I'm just literally going to focus on what's in front of us right now. And I'm always asking myself the question of what's capping the market, all right? So for me, and this is something that you'll do if you've ever got any kind of concerns about these, what I would say is often kind of finding these lines of best fit and not making them fit your narrative, just looking at different levels, right? Extremes. So, for example, we've got this here, something capped the market here, right? And here and here. So naturally, as we look left, considering how large these candles are, they're weekly candles, right? There's a lot of data inside them. I'm kind of looking at this area here, and we can see that we've had something cap the market here, right? So I'm then kind of looking left and saying, is there any confluence that I've got looking left from a particular low or a particular high that would give me a point of interest, right? So market stopped here. We had a strong move through, energetic move, displacement, retest, price sold off, came back to this area, found resistance again, and sold off aggressively. So in terms of a longer term play, I put this on here, right? And I mark that up and I do this in purple, right? That way I know it's a weekly level and I do it so that it's got a thickness of 2 and you know it's got a level of significance. Now, when I'm looking at the downside here, right, as we were coming through this point, as price has stopped here, right, this is where the storytelling comes in, yeah? So we've seen price have this large sell-off. Now, when we're bearish, as we are in this instance here, what we're looking for, certainly what I'm looking for, are inefficiencies in the market, for the market to pull back into those inefficiencies, fair value gaps, and then to either resume or show strength to move higher. So I'm targeting areas like this, right? I'll do that slightly darker so you guys can see that clearly. So this is our fair value gap, right? So 1, 2, 3 candle pattern. It's the gap between that wick and that wick there, right? Now that causes an imbalance, and those imbalances look to get rebalanced, right? So what it does is almost like if we were taking a Fibonacci, yeah, from high to low, and we're looking for a retracement to the 0.5 or the golden pocket, then I'm looking at this area here with interest, saying, okay, well, if price is going to continue lower, and why do I think price would continue lower here, right? When we get to this point, I'm always thinking about liquidity. So if I'm talking about liquidity to the upside, in this instance here, then I'm looking at that. All right. In fact, let's label that up as our liquidity line. Okay, so if we expect, so there's stop losses up here, there's breakout traders, there's bots that are going to trigger long positions if we get certain criteria met above this level. So naturally, what you've got up here is a lot of buy orders. Yeah, so think of it like that. Think of the area above here. Right, and obviously it would extend right across as well, as where you've got liquidity. Now, that means different things to different people. But basically, what you're looking at here is I'm thinking like if I'm thinking like an institutional player, like a bank, like a hedge fund, right? And I'm thinking, well, if I'm a buyer down here, yeah, for whatever reason, I've got into the market here, I've seen the structure, I'm looking for liquidity higher up, right? Now, it's the same if we're down here. So what we're looking for are these untapped highs, yeah? As price moves into these levels, you often see some kind of reaction, some kind of retracement. And eventually these levels are what are going to cause a reversal. Now, the reason that these are key levels to target is we want to think about what's clear and obvious. They're the terms that I use. What's clear and obvious, yeah? So why this high here and not this high here? These are all significant. And by the way, for my terminology, a swing high is this middle candle here. The wick has to be flanked by two lower highs. The same way for a swing low has to be flanked by two higher lows. All right, so looking for that V shape there. So the question is then, why these highs over these ones? Well, if we're thinking about what's clear and what's obvious, and then we're looking also for confluence, we're saying, well, if we're trading down here, this is where we are in our theoretical price action, right? We've labeled up this fair value gap. As price drops down to here, in my opinion, in my view, it's got two targets, right? So we've got our liquidity to the high that we've just drawn in, and we've got our liquidity to the low. So when price comes up here and it starts to break down, yeah, we've taken out this low, we've had an impulse move through it, an energetic move through it that has left this inefficiency, right? It's left this fair value gap. What we do is we're now looking for price to come into this area, yeah, and then to trade away from it. Okay, so we're looking on lower time frames to make the most of this leg down. Now, I digress a bit because I'm doing this on a weekly chart, and in truth, I don't really do this on a weekly chart. I look at the daily chart. The weekly for me here is about finding these key levels that are capping the market. Okay, so when I'm looking down here, when we were in this range here, we can see that there really was some key support here for price. All right. So as I look left, there's nothing particularly clean here. And if you're ever wondering that, a good way to do it is just take a horizontal ray, yeah, which you can find up here on this menu. If you add a star to it, it adds it to this little toolbar that you can move around. All right. And you can turn that on and off by using this star. This one down here. All right. It just means that you can pick your favorite bits that you use a lot when you annotate and mark up the charts, and then you can get easier access to it. So something clearly stopped the market here, right? There was a really clear and obvious hold on price there. That's capping price to the downside. Price has gone up from there. So we're interested when it comes back to this level. What we can see here is we get this really powerful drop through it, yeah? But as we've said before, as we looked at this fair value gap here for a retracement, here we're still in a bearish structure, right? Lower lows and lower highs. So in here, right, these type areas provide us where we're looking for price to draw into. Now, where we've got our fair value gap here, and price is fractal, right? So we look across this across different time frames, but the theory and the principle remains the same. As price draws back to rebalance this inefficiency, it doesn't have to rebalance it completely. Think of this more as like a magnet on price. It's where it's drawing it to. So then when we take the confluence of this level and we see how price is finding resistance here, that can help play into our plan for the story that we're telling, all right? But for now, our key focus here is on looking at this. We're clearly finding resistance at this level here. Chances are we're going to make a move lower. Once again, where's the prime target for that? Is this inefficiency, this fair value gap here before price moved higher, all right? So now we're going to drop this onto the daily. Bear with me a second just while I pour my tea. So a good solid brew on it. There we go. So now we're down on the daily chart. Nothing changes, all right? This is why it's very, very important to have our high time frame bias, all right? Now, if we've got our two key levels here, yeah, so this is basically our range, then something I do like to do here is just take a Fibonacci and see the 0.5 level here. I just want to see and draw this across. And make this our high time frame midline, all right? So that's just simply the equilibrium, yeah, between the higher and the low of that range. Kelly, so I am very much a Yorkshire tea drinker, love my Yorkshire tea, but really any kind of solid breakfast tea. I like a cheeky Twinings as well, and PG tips at a push probably. So at the moment, this isn't of interest to us, what's happening up here, because we're not back in this range. Price is being held outside of this range at the moment, okay? So if price does step back in, however, see it's made multiple attempts here, here, and here. What you would want to see for this to break back in, or certainly what I enjoy seeing, is when we have that initial probe higher, yeah? Then if price, I don't care if price corrects back down, but what I want to see is price then kind of come back into here, right, and hold this level, right? And what that's telling me is that it's showing strength, right? That the impetus there from the sellers doesn't exist to push this lower. Price has stepped back into the range. It's probing, right, which is a really, really good way to think about it. Price is kind of feeling out whether it can get back in. Look at the tentative kind of pushes into here. Not really any conviction. And ultimately, price breaks down. Now, where does price break down to? It searches out liquidity, okay? So because we're on the daily, I'm going to do this in my more favorite kind of like pinky red color. And down there, if people were long here, their stop losses are under this swing, typically, right? So as price goes up, people think that this is going higher. What then happens, and you see this a lot, is price comes down just below that level to take out the stop losses, to generate the liquidity in the opposite direction, before coming up to search out the liquidity and the highs, right? Now, there's different ways and there's different highs, different lows that we pay attention to. If you see anything like this, right, equal highs or equal lows. Now, people have different descriptions of these. I like what ICT says about this stuff, which is relative equal highs, right, or relative equal lows. We can just see here that price was stopped here and then again here, right? But once again, we can see the swing failure patterns, all right? So swing fail here. So swing failure pattern is when you set a swing higher, price attempts to move beyond it, fails, closes back below it, and then sells off, all right? That's what we're looking for in terms of that. So Jaden, yeah, good question. Why do you prefer linear scale over log? So I used to do a lot of log scale when I was doing swing trading or longer term investing. I find it gives you some really nice clean SR levels. But for futures trading, I've always found this not just kind of more accurate, but I feel like it certainly gives me a better feel for the movement and price action. The logarithmic scale kind of compresses everything down a little bit, kind of almost smooths it out like an SMA, right? So for futures trading and for low time frames, it's really, really important that I can be as accurate as I can be. And the trend and side like that on the higher time frames isn't of as much significance. So that's why I favour the linear scale over the log, mate. But it's a very good question. You see a lot of people doing high time frame charting on log scales for sure. Yorkshire tea, burned you legend. Yeah, absolutely love a bit of Yorkshire tea. So we've got our equal highs here. Let's forget about this swing fail for now. When price was trading up to here, when price traded away, yeah, then when we're looking for targets, we're looking for clear and obvious targets, right? So let's just pop this one on here, and we're going to do this in a dotted line, right? So when price ran this high here, we've got our key SR level, right? Price has come down. It's swing failed here, yeah. It's come back within the range. What we're looking for in here on the lower time frames are breaks of structure. We want to see a liquidity sweep, right? So let me draw out an example for you guys. So what we're looking for here, when we get that failure, yeah, and price starts to come back down, then the pattern that we're looking for, if we want to go short into this, is what we want to see is if we've got a high here, yeah, we want to see that high swept, and then we want to see a break of structure to the downside, all right? Get rid of that for a moment. So the key thing about this is that we can see that liquidity's been taken, yeah? So for example, over here as well, you could have your equal highs, right? But once we've got that higher time frame vision, once we've had that prices closed back within the range, then along with other parameters, what we're simply looking for, what I'm looking for, is for price to run the higher, yeah, to take out stops. People that were short here, right, are going to have their stop losses above this higher, yeah? So this move here takes out those stop losses. And what's the purpose of that? The purpose of that is that it generates liquidity. If you're a big player and you've got a lot of money and you want to short this market, if you jump in while the market's already going down, the weight of the money that you're going to put into that, or the position you're going to have, is really going to cause that to drop. Now, the problem is you might enter here, but by the time you get all your positions filled, the slippage is going to take you down, right? Now, if you've got a target down here somewhere, your risk has to be above this high, yeah? So all of a sudden, rather than getting filled here and having, say, a nice 2 or 3 hour trade for your risk to reward, that is getting dropped and dropped every time. So they don't want that, right? Nobody wants that. It doesn't affect retail, and I include myself in that, and other traders. You know, we're talking about big multi-billion-dollar players here, all right? So price comes up here to take liquidity. Now, what this is doing is this is getting breakout traders involved, yeah? So breakout traders are in here, they see this price come across, they see the impulse move higher, and they're like, right, brilliant, yeah? We are going up. So we've got your breakout traders that get triggered. Where else are you generating liquidity? Is from your, forget about that one. Where else you generate liquidity is your stop losses, right? So your breakout traders are now long, yeah? Your stop losses here of people that were short are buy orders. So that generates more buy orders, right? So what you've got here is you've got this big pool of liquidity, yeah, of buyers. Now, if you want to sell, you need people to be to on the other side of that transaction, right? So you're a seller, and quite simply, because of the position sizes or from the multiple accounts that are doing it, then they can engulf and take up all those buy orders to fill their sell orders. And that's when we see price breakdown. So I hope that kind of gives a little bit of a clearer view in terms of how we're looking at it from a liquidity perspective. So let me show you that in real time, all right? And then we're going to look into Sol and look at some potential trade setups in here, because as we've talked about, we've got liquidity resting here. All right, so right now, what's on my mind with Sol is, does price come down to here, do what we just talked about, show a bit of strength to get back above, yeah? And then we're looking on the lower time frames for this type of move, right? This type of move is a sweep of the low. Oh, get rid of that ridiculous wobbly line. A sweep of the low, which is this sweep, an impulse move higher, yeah, causing displacement, an energetic move higher. And then we're looking to enter in this area here, okay? Now, this is Sol. I know a lot of these charts are the same. I always try and pick just different charts just to show that I don't like pre-preparing for any of these, for these streams. It's why I like starting with a naked chart, so that hopefully it kind of gives people an insight into my mindset when I'm looking at these, all right? So we've run liquidity up here. This is our next target down here. But for now, let's just look at how this played out here, yeah? So, or actually, let's look at this. Because we've run our equal highs here, yeah? We've swept this high, so we've had our swing fail. We've now come back below our key level. So what I'm then doing is I'm dropping down to an hourly chart. And my theory is this, right? If this is the buying going on here, we formed our base down here, price has come up, we've engaged with this level, we've swept this higher, which is also, incidentally, the origin of this breakdown, right? This was the consolidation that led to price going lower. Price then revisited this consolidation here, filled this inefficiency, this fair value gap in here, and then continued lower. So that's another reason that makes this a key point of interest. The same way that this becomes a key point of interest down here, because this is the consolidation, or this is the origin of the move higher. And just to show you, in terms of our pattern, we're always looking for the same pattern, right? So whether it's low time frame, high time frame chart, we want to see a sweep, just as the pattern that I drew out above for you. A sweep. Then we're looking for the high, yeah? Or an internal high if we want to take an aggressive entry, because this is our shift in market structure, right? So this is what we would label up our MSS. And that means that the market's now shifted in structure, right? So what does that mean? That means that we've got a high, a lower low, yeah? Then we've got another high, we got a higher low, and then we shift, okay, away from bearish, lower lows, lower highs, into bullish, high, higher low, This move here is what we're interested in, right? And the reason that we're interested in this move and how it looks, if we were trading this on an hourly scale, this up candle here, you see how it's got a lot of energy behind it. It's got a good expansion, right? It's showing us that the market is willing to move, all right? And then what you're looking to do is you're looking for a fair value gap in this area. And then we're looking for price to interact with this fair value gap. And then on the lower time frames, we're looking to take our entries, okay? So that's the same whether we're doing this on an hourly chart or whether we're doing this on a 1 minute chart, all right? So let's zoom ourselves back out again, find our nice big red arrow. So we've got a cool question here from Paul Robert Smith. Hey, bud, when setting your equilibrium values, what are your conception formed from yours or whose values, morals and ethics from experience, feeling, or pre-performance parameters, and do and how often, if so? Really sorry, mate. I'm not sure I really get the question. When setting your equilibrium values, conception formed from yours or whose values, morals and ethics from experience, feelings, or pre-performance parameters? I'm not too sure what you mean. In terms of like ethics and morals, not too sure about that. I'm basing everything based on price action. If I'm looking at levels, then I'm looking for key interaction points. So what's acted as support and resistance. Yeah. And then when those levels that you see, a good way of noting the significance of those levels and whether you expect a reaction. So let's just take this level for argument's sake. When we look at this level here, right, the reason that we would expect some kind of reaction here is because look at how strong the move away from it was. Yeah. Now, if we draw this line back, now remembering obviously that lines aren't, perfect, right? They're more kind of areas. We can then, as we draw it back, see the significance. We see that it acted as support here. We see that it then blew through it here. It found resistance here, had this strong move through, and then the retest led to this impulse move higher. So when we get back to this area here, this is obviously on a lower time frame. I'd be putting this to the higher time frame. Craig, hey buddy, you missed all the banter about Yorkshire tea. It's great to have you back. I hope the meeting wasn't too onerous. So that's what I'm looking for. And then I'm basically looking for that on the highs and I'm looking for that on the lows. In between those levels, as we did on the weekly time frame, is then when I'm looking to draw out my equilibrium, which I'm using a Fibonacci for and just taking the 50 line. And that's what gives us our equilibrium of the range. The principles of trading the range are as we deviate the highs or the lows, come back within the range, we target the opposite side of the range via the EQ, via the midline. So I'm sorry because I'm not sure that addressed your question, Paul, but hopefully it does. If not, I do apologise. So as we're up here, now we're now on an hourly chart, right? We drop this down from the daily. We've said to ourselves, okay, look, we've swing failed this level. Now, what do we want to see? So again, we want to see the same thing, right? So let me just pop replay on here and I'll show you this all the way through the higher time frame to the lower, all right? So we've come up, we've interacted with this level. Now, remember, we don't want to just jump in at a level, right? Because the chances are that price can reclaim this level, use it as a platform and move higher. We want some kind of confirmation. Now, at the top here, we get a very, very small sweep here. Okay, and then we come down and we have this impulse move, energetic move or displacement as ICT would call it, for example, below here. Now, this is a sign that the market's getting ready to move, okay? So that, it does, Paul. Sorry, apologies, mate. I really didn't get with that as well as I should have done, but I'm really glad it was helpful. If you've ever got any other questions, mate, please don't hesitate to ask. I'll try and answer them a lot better than that. So if we took this early entry, right, and now this is an aggressive entry because we've got to remember we've got our high, our low, lower high, this breaks the low. This sends our structure down, right, off the base of this small sweep here. Now, if we were looking for more confirmation than that, we've got this area now that provides our kind of origin of the breakdown, like we studied when we looked left before. Within this, price has now returned again. So we could have taken positions in here. Let's say, for example, we missed that, Let's say that we weren't round or it wasn't the time zone. Well, it doesn't mean that our theory then doesn't remain the same on the way down, So what we're looking for on the way down are our clear targets. And all we're saying to ourselves is, if price is now stepping into a sell model, yeah, meaning that it's looking for liquidity lower on the higher time frames. We're just looking to be a participant in those legs down at points at which it seems reasonable and obvious to do so, right? So you don't ever want to just jump in when price is running, yeah? And it can seem like that's a mad thing to say, and you'll see it happen and you'll say, yeah, but hang on, price kind of, I didn't enter there and then price went to target. Doesn't matter. When you do it enough over time and you test this over years and years of data, you'll find out that a lot of those moves are often traps for people, right? So, and then we would be aware of these as well, but I'm just going to put a key one on this low down here, right? Now, this doesn't mean that I want to just close the trade when I get to here on these targets, but it does mean that I want to monitor what happens as it's going down, all right? So we've had our origin of breakdown. Now, let's look for the other moves that we get in here, right? So we've got this. So once again, right, we have our sweep, yeah? Now we're looking for a clear low, which we've got here. Let me zoom in on this for you. Right, so the same as here, sweep, here's our low, there's the break of structure or the shift, yeah? Sweep again, here's our low, price comes up, shift in structure again, right, or continuation in this case. What you'll notice in both of these is that the move down has left inefficiencies, these fair value gaps, which is what we're targeting when price comes back up to them. Now, this one, what we can see here is prices come up, just tagged into this and then sold off. Now, what I do, and let me do this on a 5 minute actually, because I know a lot of people don't like executing on the lower time frames, right? Which is absolutely fine. I don't blame you. Make sure you're doing what you're comfortable with, okay? So when we're in this position down here, we've got this fair value gap, right? Which we've drawn up on our hourly chart. What we're then looking for on the 5 minute chart is for price to come into this area, to this inefficiency. And what you'll notice here is how it's kind of just blown straight through this. Yeah. It's blown straight through this, and then it starts to consolidate in here. So we're then saying to ourselves, okay, what's capping the market here? Yeah. What's capping the market? And this is when I'm starting to look for order blocks. All right. Now, you could say a few different ones in here. For me, I use the bodies of the candles. It's a little bit of an older FX style. All right, and that's going to be in blue. Now, the reason I'm interested in this one here is because this is the up candle that led to price going down. It then got retested in here and led to this big sell-off lower, right? We've then had another retest of this area here, and we can see the significance of it as we go through. So our principles remain the same, or not our principles, our entry methodology remains the same, right? We need a sweep of a high and then an impulse move to break the low. So excuse me, what we're doing is we're searching through as we go on our 5 minute chart. No sweep on that, no sweep on that, no sweep on that. All right. Then we come to here and we get this move higher. Okay. So this move higher, we're saying, okay, if this is to generate liquidity, because it's taking liquidity from this high and from this high here as well. All right. Now we've had the sweep. What do we say? We get the sweep. We then look for the low, which is here. And we want to see that impulse move through it, right? And we get that displacement. Now, price comes back up, but we don't get that deeper retracement into here, which means that in this particular instance, we wouldn't have got an order in, all right? Price is still respecting this fair value gap. Now, if we got a deeper retracement into here, yeah, and we've got this fair value gap here, then that is where we would be looking to get short. But we didn't get that retracement this time. Not a problem. Don't chase it. Right, or whatever your system is, make sure that you're staying true to your system, because for the ones that do work, you have a lot more that don't. All right, but as humans as we are, we'll remember the ones that did, and it gives you a little bit of a skew. So yeah, you'll miss these kind of moves. You won't get the retracement, but look, we then get the pull into this fair value gap. Yeah. So we remember, as we were talking about last time, and now in here, we're looking for the same patterns. We're looking for sweeps, breaks below, right? So within here, if you're looking for this, you come down, you've got your high, your low, lower high, lower low. This move up here, you see how it probes these highs, right? You have to be a little bit more patient on a 5 minute chart. I'm used to kind of doing these on a 3 to sort of a 1 minute chart, but the principle remains the same, all right? We're looking for a high to be swept, an impulse move lower, yeah? And then within this range here is where we're looking to take our position. Now, there's a few different ways we can do that. If we're bearish here, which we are, we see this move lower. Once the price closes down here and we can see the energy behind the move, right? The sellers have stepped in. We can either mark up the breaker, which I do in orange. Yeah, so price sweeps the high. This is the down candle before the sweep, which is a bit counterintuitive because it kind of, you'll think of an order block, right, which is the last up candle before the move down. But you can see in here as well that this is just capping price here as well. And burned, I learned fairly old school like FX markets, and a number of the people I learned under would just use the bodies because the volume of the move is in the body, and the wicks tend to represent more kind of deviations. And it was very similar then when I traded under SC, although he does use expansion wicks on order blocks as well. But for me, I've always found it a little bit cleaner. So let's look at the confluence we've got now. We've gone on to our daily. We've got our bearish bias. We've not just jumped into a trade. We've then gone on to our hourly and we found the key areas where we think price is going to get drawn into before continuing its leg lower. One of the difficult things with trading sometimes is that it's counterintuitive, right? So basically, we're looking to short when price is showing strength on the lower time frames, but we can't forget our higher and medium time frame bias as to why we're taking the trade, all right? So with this one here, that would be our entry. So it would look like this. So when price closes down here, you set it on the bottom level of the breaker. This goes just above the swing high before the breaker. And then you're first of all trading to your clear and obvious target, right? So we get this move down to here. Now, I would be very conscious of this into here because if I'm wrong, yeah, then there's a chance that price comes in, yeah, takes this liquidity and then goes higher, right? So when I get into here, I can trim a little bit off the trade, or I can certainly make my stops flat, yeah, meaning that I'm moving my stop loss to my entry. And sometimes you'll get tagged out, but if you do, you often have the opportunity to get back in, okay? But my main target is here, and then I'm looking left, and obviously we've drawn these ones in already, so we've got targets all the way here and lower, okay? But on the way down, when we get to here, that's when I'm trimming some profit, all right? I'm not expecting these to be 8, 10, 12R runners, right? I'm happy to book little and often. I'm happy to book 2, 3R on a trade, all right? Because every trade I lose is 1R, yeah? Let's say, for example, my 1R is 1,000, or let's say it's $100, yeah? My 1R is $100. Then every trade I lose is $100 plus fees. Don't forget about your fees, right? So if my average trade can be 2, 2.5, 3R, then, you know, it gives me that really nice buffer. Yeah. And then if I can get my success rate on the trades above 50%, then you've got a really, really winning formula. Okay. So that's the entry for a breaker. All right. Let me just get rid of the order block now. Or we can use this, which is the displacement leg. Let me just get that lined up and I'll show you how we take this and then what it means. So this is about premium and discount. And I was part years ago of ICT's original mentorship, which taught me an amazing amount about the kind of principles of premium and discount and price moving liquidity and stuff like that as well. And then I refined and learned a lot more on top of that from people like SZ. I love studying other traders, right? But price action's my thing. But this is something I've always found really, really useful. So when we get this move lower, this leg down, yeah, becomes what we would call the displacement leg. So this is what's really shown us that price is ready to go down. This has taken out the structure. This has moved us lower. This is where we've had that energetic move. Now, because we wouldn't see this price action developing in here, right? We wouldn't see that price action developing. What we know is we've hit our hourly fair value gap. We've got our breakdown pattern confirmed. We've had a sweep. We've now had the displacement. We've had the move lower. Now, I'm going to go through this one candle at a time. And you see this first up candle we get? That, for me, becomes my displacement leg. Okay? Now, within this, I'm looking to short from an inefficiency, from a fair value gap. Let me zoom in a bit for you guys. Right? I'm looking to short from one of these inefficiencies. Now, how do I pick which one? Because we've got another one in here, right? But I don't want to be shorting in here. Why? Because this is in discount. We don't want to be shorting from here. We want to see price travel back to premium to short from here. So it's just a simple 50% range. Yeah, I do it with the colors just so it stands out on the chart for people when they see it. But I'm just looking for this 50% level. And then I'm looking to enter on the fair value gaps that are above it. So we can see straight away, we have this one. But then we also have this one above it. Now, it's very, very important that we respect this one as well, because we don't know right now if price is going to come into this one and go away, or if it's going to draw a bit higher into this one and go away. Or we might be wrong and it could come up here, take out our stops, and we're out, right? But our theory is that price is going to look to rebalance these and move lower. What I do personally is I do one of two things. I either respect the original FVG, yeah, so I put it on that there, and then my stop goes above this swing. You can have your stop above the origin candle of the fair value gap here, but I prefer to just add a little bit extra on top and then a couple of pips, especially when trading crypto, right? Because it's a little bit more liquid, can be a bit more volatile. So we've got our entry. Now, where's our target? Like we said, yeah, that's our clear and obvious target. Now, we'd be monitoring down here. Maybe price kind of gets involved around here where we had this down move, right? Because we've got, again, right, like we said, just I know I sound like a broken record, but right, this is the origin, this is the sweep and the break above, yeah, that led to price moving higher. So we'd be aware of that here. So let's just draw that across here and say, okay, see how price interacts with that. Maybe we trim some profit here. What are we? 1.95R, okay? Now, obviously, we have targets lower down as well, as we know. We've got these levels, so let's draw them in. But we know very much that we're monitoring price when it gets to here and also to here. Okay, it doesn't mean that we have to close out some of the trades. It might mean that we want to de-risk by moving our stops up, or it might mean that we just want to trim a little bit, right? And then book a little bit of profit, okay? So as price moves, yeah, now we see it's moved lower, right? So all of a sudden, this now, we need to extend our displacement leg, right? Because that's actually the low. So does our fair value gap still fit into that? It does. Obviously, it's just going to increase this range as we go lower, but we want to make sure that we're accurate, okay? So then as price starts to go down, okay, it's tagged us in, yeah? So we're in here, our stops are above here, and then we're now looking for price to reverse and seek liquidity lower down, yeah? Just think of it like this, because I know liquidity principles can be complex sometimes and people struggle to get their head around them. For every market, you need a buyer and a seller. If you're selling apples, you need someone that wants to buy those apples from you, right? If you've got too many apples and there's not enough buyers, then the price of those apples is going to go down because the demand outweighs the supply, yeah? In the same vein, if there's not enough apples, then the demand outweighs the supply, so it drives the price up. When we're looking at liquidity, right, let's just look at this and kind of say, okay, well, let's think about it. If price is rejecting here, why is it rejecting? It's rejecting because people aren't willing to buy it up here, right? They've got, think of it like this, right? It's too expensive. Yeah. They're too cautious to buy it up here. So all of a sudden the value of that product drops. Now, where does it drop to? Well, it drops to where there's liquidity that can potentially change that scenario, right? And that liquidity will typically rest below here. If you've got equal lows or equal highs, it becomes even more of a target. Yeah. But that's why we're marking out these. The reason I mark this out is because it's a key area that reversed this downtrend to go up. I still don't expect price to reverse here, but I do expect there to be some interaction. Okay. So as we move through the candles now, we see it moves up to our next fair value gap, right? That's why we don't want to be too stingy with our stop loss. The other thing we can do is we can place orders in here and in here as well, yeah, to go up and then dip. So as we look at these, what's happening with price? It goes higher, 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 puts the wind up us a little bit, yeah, because it draws up higher. And you, with traditional markets, trading things like ES, like the S&P 500, the NASDAQ, etc., it's tends to be a little bit cleaner. Same with FX, much bigger markets, right? crypto can get moved around quite violently, which is why we don't want to just set it right on that nub. You want to just up it a little bit, yeah? And what we can see is if we got greedy and placed our stop above the origin of the fair value gap move, look what happened here. Now, whether you believe it's engineered or whether you believe it's just the way that markets move, look how it's just come up enough to take out stop losses of people here before really, really having that aggressive move down. So let's put our stop back to where it was, a couple of pips above this high. As we can see, it's nice and safe here, and then it goes down, right? And we get that nice aggressive move to the downside. The other good thing is when price comes into here, we don't have to just set a limit order to stop ourselves out, do we? Because we can see how price has just flown through here. Yeah. So again, let's remember what we've been discussing on the way down. If we expect price to move lower, same as we did on the daily, the weekly, and we've done on the hourly, let's mark up our fair value gap, right? So we're using this. See how price draws back into this? Now, what we don't want to see is price find strength in here, yeah, and kind of use this as support to move higher, all right? We want to see price hold here, yeah, and that then gives us the conviction to move lower. If it starts to come above, we can start trimming some profit, all right? You see how it's just being held, it's kind of being suppressed. That now, when price comes up to here, we're saying to ourselves, okay, it's all getting a bit dicey. Price has come up. Let's fill that in. Where's our last kind of line of support here? So that's me moving my stop loss to entry, okay? That's how I'd look to manage this. And then I'm looking at this fair value gap here and I'm saying, I want to see this hold, right? Obviously, we've not got much room before our stop loss gets tagged, but it's no problem. We've booked profit, right? Like we said, we didn't have to close anything down here because we didn't want to, but we hit our initial target. Say we closed 40% here. Again, can be completely up to you. Actually, let me put that back up here again, actually, because... Oh, hang on. It won't let me do it, will it? So we can work out what our risk to reward is. Oh, come on. No, doesn't want to let us do it, does it? Let's just pop another one on there. So that was our entry. Our stops were a few pips above this high. So when we took our first profit, we were at 3.25R. All right. So that's when we've trimmed. We've now come up. We're not out of this. There's no point closing this out yet. We've booked profit. We're in a good place. We've still got targets lower down. Yeah. Let's not forget about that. And we don't want to take that off the table. We've got 60-50% of our trade left running here. All right. We've covered our fees. We've booked some profit. We're in a good position. We're using the fair value gaps to now manage the trade. Obviously, if it gets above this much, it's probably going to tag our stop loss. So I'll move this back to entry now as well so we can all understand. But then we watch this play out. Okay. And ultimately, we then get down there to our target. Now, there's nothing to say that it won't reclaim that and move higher, but do you see how we've kind of built that bias from the higher time frame and down? I'm sure that's a little bit convoluted how I've explained that, but hopefully it kind of puts it in the mindset because I just want to use, I'll give a bit more time because I really was hoping to do that in about 20 minutes and I've been rattling on for about 30. Let me check a few comments. I've seen a very, very good friend of mine just jumped on the stream as well, which is awesome. Poiter, my good man. How are you doing? Hey, BC, hope you're doing well, buddy. 2 questions. When you look at fair value gaps, do you start looking on daily, weekly, 4-hour, and where do you start? Question 2, what is an order block? ICT defines it as change in a state of delivery, but I'm having a hard time grasping that. Sure, let's cover that as well. Let me just look a little bit higher because I know we had a few other questions as well. So, yeah, so that was on there. C-Ron, my man, here we go. When you are trading... you're set up on TradingView, or do you do it on the exchange you trade on? Sometimes there's significant difference in price, especially on perpetuals. Yeah, so it depends what I'm trading. If I'm trading traditional markets, then I plug in directly through the API. What I do on here is I have a multi-screen setup at home. I have my trading exchange on my center console, which is with Bybit, all right? And then I have the Bybit charts up on here. Obviously, I know I'm not trying to teach you how to suck eggs, which is a ridiculous English expression, now I say it. It means I know you know this, but just for people that maybe don't, you've got to make sure that you're trading the charts that link with your exchange. So if you're trading on Bybit futures, you need to be trading, you need your TradingView chart to represent the Bybit perpetual chart, the futures chart, right? Because there will be differences. But what you can do is you can plug your exchange in. So like on here, I used to trade with Pepperstone, for example. You can do this really cool as well. You can do your paper trading one with TradingView, just really get yourself in the mindset of moving it along. But you do have there's crypto plugins for this now as well, right? So you've got different crypto companies that can plug into these, but obviously it's more set up for your traditional markets. And I know people often ask me, so you've got OKX in there, for example, who are a crypto brokerage. People often ask me who I trade with in terms of these. It's not that I don't want to recommend anyone. It's just that it varies wildly from which country you're in. Yeah. So, for example, like Pepperstone are very prominent in the UK. Depends what you want to go on for that in terms of them. FXCM are quite popular as well. Forex.com, Oanda. So it's just about diving in, and like with anything, just making sure you're doing your own research. Yeah, but that's what I do. I'll either have an exchange that can plug directly into TradingView, and then I can open my positions here, here, and here, right? But mostly I'm just using it on the exchange in front of me and making sure I've got the matching chart on TradingView as well. I hope that helps, mate. Paul, another good question here for Paul. Do you think other big drop to the 20s is likely, cut collateral from oligarchs, etc., asset value, or gen up to the end of this 3 or 4 year peak and climbing around 60k or higher top this round? Oh, it's a very difficult question, mate. To be honest, I don't really make any medium or long-term predictions for price. What I try and do is I'm trying to work out what price is doing now, where it's reaching for on a daily scale, then an hourly scale. And then I'm just looking to get involved in those kind of micro moves. That's certainly how I trade. We'll do this on Bitcoin in a minute. Look at the higher time frame view, and I'll tell you the kind of levels that I'm looking at and why I'm looking at them, and hopefully that will kind of put a bit of clarity in there as well. Craig, thank you, buddy. Really, really good. Like the candle by candle explanation. Okay, cool. Well, I'll certainly do a lot more of that then, bud. Hopefully that's helpful for people to see that. Not a broken record. Appreciate covering thoroughly. The house is far better. Oh, thank you, Paul. That's a really kind thing to say. Yeah, I appreciate it. I really can waffle on. I thought I'd do this stream in about 25 minutes and it's an hour, but I prefer having the value there. But I do know it's a pain in the backside for people watching it back, or for you guys giving up so much time live. So hopefully it's of value. If it's not, pop something in the comments and just let me know to shift on with it, and we'll go with the majority vote. So, Ron, you're more than welcome, mate. So let's have a look then. Poeta, my good friend. Here we go. Hope you're doing well. I am indeed. Thank you, mate. The same right back at you. When you look at a fair value gap, do you start looking on daily, weekly, 4-hour time frame? Where do you start? Cool. Perfect. All right. Well, that leaves us in a good position. Hopefully everyone's kind of got the feeling and the thought behind this with Sol, and how when we kind of zoom out, we look at this and it all seems really scary on the lower time frames. But actually up here, we can see we've just got these key liquidity levels that price is traveling into. We wait for our break of structure. Yeah, we come in here, we get our market structure shift here. We're looking for our initial shorts here, which we didn't get a setup for, if I remember rightly. We just didn't get the sweep, no problem. We then get this extended breakdown here. We're then looking for price to return to our fair value gaps, right, before then trading them lower. So, obviously, a big part of my trading is stuff that I've learned from ICT. I've also been very fortunate to learn off of a lot of other incredibly good traders over the years. Trader SC, who's just, in my opinion, probably the most exceptional trader I've ever come across when it terms of price action. And there's some really, really good guys out there as well. You know, some really good guys. There's another guy, Dominic James. There's our crew that we've got some amazing price action traders in there. Razoon, who's exceptional. Jay, Trading Tank, as you'll know him as, who does more swing stuff. But what I would say is find out the niche for what you want to study and what's realistic for you to be able to do. And then find good people in that space who are willing to educate you. I'm a firm believer in paid groups. I know they come under a lot of criticism, but for me in my life, I learnt the most. If I hadn't been part of paid groups, if I hadn't paid for my education, I don't think I would have come along, certainly in the time that I did, or maybe not at all. However, there is a lot of good stuff in the public domain as well. And that's why I try and do kind of like a little bit of both, really, and hopefully that pays out. And why, as a company, we try and offer it. If you sign up with the Bybit link, you get access to the group, right? And you don't have to deposit a lot. It's just a nice way, hopefully, that people can earn some money off the calls whilst also learning to trade. All right. If you want to find any information on that, you can find out loads of stuff down in the description below. Okay. So before I digress too much, just to give a quick heads up on where I think Sol is going from here, or not where I think it's going, but what I'm watching for. This low here, as we indicated earlier, which is capping the market, found support here. Run the liquidity there, run to the highs. Well, this is our next kind of liquidity sat down here. So if we see something like this on Solana, and price gets back above here, I'd be looking for some move like that, exactly as we described on the lower time frames, right? So I want to see price come back up. I want to see it run these stops, take out the liquidity below here, show strength again to get back in here. Then I want to see it hold this, then a little sweep on the lower time frames, an impulse move higher to show that it's ready to go. And then we look for pullbacks to either a fair value gap or our breaker line. And then we look to long into these highs. All right, but also being aware of that order block down there. Okay. So that's where we are on Solana. Now, somebody else mentioned earlier, was it possibly Matic? I think got a couple of shout outs. And then I know there was Optimus as well. Let's just take a very quick look at Matic. Sebster, bit clearer every time. Awesome. Brilliant. Yeah, it sometimes takes a while to it sometimes takes a while to get into my rambles, but over time, I think like a lot of the OGs on here, you kind of learn to decant them a little bit, interspersed with making yourself cups of tea. So let's take a look at Matic, shall we? Let's finish up this trade. Let's just look at Matic, and then we're going to cover your questions on here as well, Poiter. Let me see. I think I've just rejected it out of my... Yeah, here we go. So here's our Matic chart in terms of doing anything kind of higher time frame. We can see these levels of interest that we had on here, which are weekly levels, right? Again, in purple. Just looking for those key points where price can kind of interact. You see how you get this kind of immediate, these long upside wicks here, what you could also call absorption, and how price is just getting pushed down here. Then you look how price interacts here. The wicks are less, price comes up, it's a bit messy, closing, not closing. Where again up here, you see this sharp move up, yeah? And then you get the long upside wicks, price immediately comes back down. So you notice how this is a little bit more like a V, yeah? Same as this here, these rejections, you'll hear them like this, these V-type rejections. Where notice how, let me just get rid of those quickly. Notice how this move here is a lot more structured into the level. How it kind of steps up in stages, yeah? It's coming back, retesting, and then what do we get once again? Sweep of the lows, break of the high. Yeah, and that's when price is ready to move. Obviously, it would be that high we'd be monitoring on the lower time frame, but that's the kind of principle. But let me just get rid of this on here. And let's just start with our naked chart, okay? So we'll keep to the daily. What are we looking at on here? Now, the key thing I'm asking myself is where's price reaching for, okay? So at the moment, I don't think I'd want to be kind of dumping, like running into shorts, because we've run the liquidity down here. Make that our liquidity line, actually. Yeah, so price has run this liquidity line down here. Now, if our bias remains bearish, which in truth it kind of has to do at the moment, lower lows, lower highs, right? Then I'm just first of all marking out where I think the key lower liquidity is. Yeah, and I'm just going to do these now, red line and then dotted as well. And that's of significant interest there because these two have been stopped in the same place, making them equal lows or relative equal lows. All right. So now we've run this level, we're saying to ourselves exactly the same as what we were doing before. We see this inefficiency here. Yeah, this fair value gap on a daily scale. And let's draw that in. We're saying this can be what's drawing price higher. And we can mark that up. Fair value gap daily. Definitely not there and definitely not in that font. We want that inside, right. Okay, so our fair value gap daily. So we're saying to ourselves here, okay, we've also got some internal liquidity here, right, which has been caused by this low. So we want to be aware of that as well. Now, it doesn't look like a lot of a drop here, right? But bearing in mind we need like around about 0.5% for a decent day trade. We've got, just over 4% there, okay? So that's really the key thing that I'm looking for here. Now, if price was going to blast through this fair value gap and find support, then I'm just looking for the next liquidity resting above the highs, okay? So now when we drop down to our hourly chart, we can see how price has had this drop. It's kind of reclaimed this liquidity level. So it's shown it's run that. is taken out the stops from this low. And then we've had this move higher. Now, on the hourly, once again, we're looking to this area here. But what we can see is when this has dropped down here, yeah, and we've created that fair value gap, price has come in here to rebalance before moving away. So now we're saying to ourselves, okay, well, where's the liquidity been taken most recently? We can see that that's been swept. And where has price gone? Sounding like a broken record, I know. But price has come down into our fair value gap down here, right? And now we're finding a reaction in here. So, you know, higher high, higher low, higher high. So this has broken that low, but we haven't set the lower high. So if we were to do an aggressive, trade in here on a lower time frame, what we might say to ourselves is, okay, we've hit this fair value gap. We now expect price to travel higher. If we'd had a fair value gap higher that it could come into, I'd be a little bit more confident of playing like a scalp long from here to a target, because it might, you know, show some strength here and move higher, or it might get to our target, yeah, and then break down. If I've got enough room in there, yeah, then you can always do this. However, if I'm ever counter trend trading, so on this time frame, higher highs, higher lows, yeah, so we're bullish. If I'm looking to counter the trend, yeah, then I do it with half a position, right? So if I was looking to short this, but I'd need a reason to short it. Now we're coming up to here and we've taken this liquidity out. If we're going to show strength here, then I'm looking at this up here as the next potential target, which again fits in with our theory that price is going to come back to this fair value gap to rebalance, all right? Now, if I drop this down to a 5-minute chart, what we want to see in here is our sweep. All right, so we can see liquidity taken here. We're then looking for a market structure shift here. Okay, so then when we get that move higher, once again, we've got our fair value gap in here. So if we're looking now on this time frame, we can say, okay, we've got liquidity resting here, liquidity resting here. Yeah. So when we're looking at our bias, we're saying if we were bearish here, and bearing in mind high time frame, obviously we are bearish, we can look at this here and think, well, maybe price is just simply drawing up into this, right? And then if we get what we were talking about before, we get that sweep of the highs, that displacement move lower, yeah? So highs swept, lows closed beneath. Then we look for trades to come back into here, yeah, before shorting them to our lower targets. All right. So when you look and when you study price on, excuse me, on the lower time frames, then when you look at moves like this, you see these strong moves up followed by these strong moves down. Yeah. Quite often what you'll see within these is a fair value gap on the way up through a fair value gap on the way down that then gets retested here, and you get that shift in structure. All right. So when you're looking at price action, yeah, and you can go and you look at this anywhere, right? When you see these moves, what you're looking for is these sharp moves up and then sharp moves down, right? Obviously, you're not just kind of trading them blind, right? You want to see confluence behind it. You want to see it engaging with a key level, all right? But even like this one, powerful move up, sharp move down, right? This move up is taking out liquidity. We can see the highs that it swept, and then look at that move down. Now, the move down should leave fair value gaps, or at least one in there, yeah? And if we measure this leg down, like we said about our displacement leg, then we want our fair value gap to be in the green box. So we've got this here, for example, which we would have to respect. And then what else we've got is just in here, we've got this little fair value gap here. Let me zoom in a bit, actually, so you guys can see this. Yeah, so you see this fair value gap here? Now, we can't take all of it because not all of it is in premium. So what we need to do is draw that up. So that's in our premium. And then this would be our entry looking to go short. All right. So when you're looking at price action on the lower time frames, don't get too caught up with the structure. The structure just needs to marry what you're doing on the higher time frames. All right. But when you're looking on the lower time frames, look at how price is moving. Look at how it's trying to probe areas. Look for displacement, right? So people getting bullish here on the way up, they're not paying attention to key levels necessarily. And also, if you want to stay bullish here, again, you can just wait for confirmation, right? So price has broken above this, right? Price has broken above this. This is the high that it's set. We'd want to see price come back down, show this level here some respect, yeah? And then you wait for your purge, yeah? Your sweep. And then you look to get your entry in here, obviously on a much better straight line than that. But you look to get your entry in here, right? The mistake a lot of people make is they see this break above and then they're starting to FOMO in here. All of that liquidity gets taken and it can often be there to engineer a move to the downside. All right, so waiting for confirmation can be key. Now, what I would say is I need to just cover the little bits for Poiter. So he's asking about fair value gaps, right? So let's have a look on here. And let's just pop all this away. Now, for me, no matter what time frame we're on, fair value gaps for me are inefficient moves in the market that are looking to be filled. So if we go to just any random spot, let's say here, right? So we've got this high. And again, we don't need to cherry pick these, right? Because we're waiting for the market to tell us. And you'll notice that I don't change any of these entries, right? I'm just looking for sweeps. So we have that one, which is a raid on a prior high. We then have the actual sweep here. Yeah, price comes up, sets this low. So this is our market structure. Break or shift to the downside. Right? Oh. Done it again. Anyway, you get the idea. That should be underneath. But that's our shift, right? And look at the displacement. Look at how price has run down. Yeah. It then again comes back into our area here, right? Which would come into contact with our breaker. Or we'd be looking, you can always extend this line across, have that as your breaker line, right? As I used to call it. Or you're obviously looking for inefficiencies in here on the lower time frames for price to draw into. So when we're talking about fair value gaps, the key thing for me is looking at them in terms of areas that draw price in. Yeah. So here we have our market structure shift, right? Sorry, I'm going to have to change this because my mild OCD just won't allow for it. All right. So there's our shift, right? Then we're looking at our displacement leg. Price is coming into this. Yeah. So now when we've got this move lower here, yeah. So this is our move lower. This is our low. Price has now come up. Yeah. Price has now moved down. We've had this drop further. We can see that we've taken out liquidity here. Yeah. But we've got further liquidity targets down here. If we're remaining bearish with our bias, yeah, then what we would do, we would then go up and we would have, we would be looking at this as a weekly as our high time frame, right? Because this is a daily chart, but it's just to show you that price is fractal. Okay, so when we're here, price comes down. What are we looking for in here? We're looking for inefficiencies, yeah? So we see this one in here. We can also see that we've got a little one in here that's been filled by this, right? So when price gets into this area on the lower time frames, once we get that breakdown, so all I'm doing now is I'm moving to my next time frame down, which is our hourly. So here's the draw on price. We see as price breaks below here, we get price comes back into this, yeah? So if we were trading this at this point, if this is closed, this would provide us an opportunity. We would look for price to be drawing into this, yeah? And then we're looking for breakdowns and points of entry, which we would do on the lower time frames. However, we can see price now is coming up and drawing into this level. Let's just play this out a little bit. So what we're waiting for here, yeah, is for price to tell us that it's getting ready to move. So where does that happen? We've kind of got two movements in here. So we get our sweep. We get our shift in structure. Again, look at the displacement down. Get that large move down. We then take our leg here. And then we look for this inefficiency in here, which would be our entry. So our fair value gap here, because it's in premium. And our stops above the higher, right? Now, if obviously this is doing it on an hourly scale, just again to initiate the prices fractal, you would take, like I said, the swing high above that move, which is this one. If you get too aggressive with these and chase too much risk to reward, then you can get hurt by being too greedy, all right? Now, the other thing that we've got here is we've got a repeat of that, right? So price comes up, sweeps, and then we're looking for our low. You could take a very aggressive low on there, but I would probably be favoring this one, right? Then price comes down, leaves our inefficiency in there. Then you're looking for price to travel up into your area of interest, and then you're looking to trade it down, all right? So in terms of fair value gaps, I'm using them basically to look for where price is being drawn to that gives us an opportunity to then get back on board. You know, for examples, we've got this fair value gap here. Look, if we've got a clear downside target that we haven't reached, yeah? So you don't have to FOMO into moves, but what you can do is you can just wait for the market to get into a position that you want to trade it, yeah? So obviously we'd look to do this on a slightly lower time frame, but even on this low time frame, look, if price is coming down for here, for me, it's unlikely that it just reverses here in the middle of nowhere, yeah? Especially if we're beyond our golden pocket on our Fibonacci, which we would be down here. Then I'm saying, okay, well, I think price is going to head lower to this liquidity, right? So what do I need to see? Well, I want to see the same things that I've been rambling on about. So displacement below, price consolidates here. Here's our fair value gap. Our entries on this fair value gap, our stops above this high, and our target is here. All right. So in terms of fair value gaps, that's how I'm using those. Order blocks, I have a slightly different view on this from ICT necessarily. I think different traders interpret them differently. For me, I'm looking for a bearish order block. I'm looking for the last up candle, yeah, that's changed market structure, right? And then what I want to see within that is I also want to see that retested. So this one here, this is the up candle. Price broke down, retested this, and then broke structure. Price has then come back up into here, failed to get above it, broken down again, retested it again, and then sold off again. So when we get to here, that becomes a key point of interest, right? This one here, for example, for a bullish order block, we're then looking for the last down candle or the last high volume down candle before we get that same move up, all right? So here, we take the down candle, and once again, we see that move higher, that retest, and price then moves away. Then when we draw this across, right, what we're looking for that to be flipped, yeah? So if there were loads of buyers in here before, yeah, and let's say, for example, you've got people coming in here, price comes all the way down. Let's say you've got people short here as well, yeah? Then you've got stops under here that provides a good liquidity target. So if price is being drawn down here, where the buyers were before, you want to see this flip to sellers, right? So then when you get back to here, first of all, you're looking for a bullish reaction here, which you don't get. Price just slices right through it, right? Doesn't respect it at all. When it slices through that, then it comes back up. If it then looks to hold below it, yeah, then that's where you can look to take some slightly higher probability short orders, yeah? And then if you're looking for this back here, one of the things that SC taught me, which has just been amazing, really bit of information that I've used through all of my trading career, is if you're then looking for something like this, you're looking for the down move that then led to price moving higher. Yeah, that's basically what order blocks are to a degree. Yeah, and what you're also looking to do, you can use it in terms of managing your trades. All right. So if we just look at this leg up here, this is the last thing I'll bore you with, right, before I leave you alone for the day. We look at this leg up here. If we just mark out the points of the areas of consolidation, or importantly, these down moves, yeah, these down moves before price moves higher, then even if you just do them very roughly, yeah, and you look at that one there, that's the down move before price moved up. See how it's respected here? And comes back up, and look what happens when it's lost. Look how price cuts through it really easily. Then when it retests it, yeah, it can't get above it. It now confirms that, like a support resistance level, that's been flipped. Okay. And then I would look to do that on the different moves. So managing these, for example, this trade would be no different. So here's the consolidation here. The price has come up. I'm in shorts here and I'm thinking I want to re-enter here. Yeah, I can just take this consolidation here. And then you can see how price is being held below that. Gives us extra conviction to take our entry here, trade it down to this order block. And then when we flip this order block, it keeps us in the trade and allows us to expand our risk to reward. I know there's been a lot of kind of jumbled coverings in here, guys. I do hope it's been useful. Let me just look back at some of the comments. Nitpar, thank you, mate. Craig, it is a value, very interesting. Imran Khan, you're very welcome, mate. Do you put what amount in long-term return? Say 60% to you made your 15-20% profit cash, and in other 40% split, what sizes for weekly, 3 month, 1 year, buy, sell, as dare wait before it drops off? So for me, what I'm looking to do when I enter a trade pool is I want to get into the trade quickly. I want to see my initial target and then I move my stops to entry. I de-risk very, very quickly. Yes, it does stop me out and then occasionally price really rips to the downside. But for me, and let's use this as an example, if I'm short here, yeah, and I get to my first target that says here and I've made 2R and I've taken 50%, I'm 1R up, I've covered all my fees, I've got a little bit of money in the bank, right? Well, then if price here surprises me and comes back and say it takes my stop loss out here, right, then I'm just patient. When we then get this displacement leg lower, failing to take out key liquidity, I'm then targeting and I'm looking at where I can get back on board. And then that's when I'm either compounding a position I'm already in, or if I'm out of it, I re-enter here targeting the lows. All right. So my high time frame bias remains the same. So when we're down here, if I'm short here, I know where my key liquidity is. It's here and lower. I'm aware of these areas in case we get some kind of reaction and I can get out of the trade. But realistically, I'm just managing it and looking at other areas I can then get in and compound. All right. A couple more. I start to feel a bit dotty when I spend too long studying all this, too long and often. Yeah, it's price action will get it, but it's very, very addictive. Well, in the same way, every single pat on the bet people give you, causing that stuck record player jumping in patterns you get for the good advice you give us. That's very kind of you, Paul. Yeah, I should get better at delivering it. Right, I keep you guys far too long on the streams, but I'd rather give a bit more information. Hopefully, people can decant it, and then people come back. You know, a lot of people attend this stream on a regular basis, come back with really, really good questions, really insightful stuff, and I love kind of going through that kind of bit. Bern, do you still pay attention, use mitigated FVGs? Yeah, so I think if you look at kind of, obviously that's an ICT concept. I think if you look at where mitigated FVGs and that are very important, and like at the top of market maker models, right? When you're looking to get that smart money reversal and you're looking for the gap in the move up, yeah, and then the gap, so fair value gap in the move up, fair value gap in the move down, and you can see that they kind of, where they cross, that can then offer as resistance, and then you move into the sell side of the curve from the buy side of the curve. Sebster, I've done that FOMO breakout long so many times. I've learned now and trying to implement it. Yeah, mate, everyone is there in the early stages. You know, Warren Buffett himself said it when they turned around to him and said, "Look, as probably the most successful investor of all time, if you think investments and markets are predictable, why is there always money on the other side of it?" And he said, "It's quite simple. A new sucker is born every minute." And that sounds really derogatory, but it's not. It's something we all go through. We all add liquidity to the market on the wrong side when we're learning. The key thing, madness, is to keep doing the wrong thing again and again, right? That's the definition of madness. If you do the wrong thing, getting it and learning from it can be some of the very best lessons that you'll ever learn in life. And every day, you're right, is a school day. And Burned, yeah, I know Enchi actually kind of just threw thingy, but that is a really, really cool indicator. I just old school, I like to do it by eye, but you can actually use that as well. There's another guy called Nephew Sam, I think, who makes a really good one. And let's just go through a couple more as well. Are you sat wearing your Superman style OCD cape right now? Yeah. Do you know what? I really want one. I really want an OCD cape. So if anyone knows where I can get a customized OCD cape, let me know. And I'm just having a little bit of work done on the office at the moment and on the property in general. When that's up and running, I'm going to have the camera set up. You see the office and that. So when you get to see me in person, then I think I'll look really epic sat here in a cape or like a complete tool, but I don't mind really as long as it raises a few smiles. If not, you can borrow mine. Brilliant. I'll send you the postal address, mate. I just sit down in my Spider-Man undies. Fantastic. I love the fact we've still got loads of people on this stream. We're now going into the underwear and cape section. Great stream, thank you so much. I have a helmet when I trade. I need to get a helmet actually. I've got a few dive helmets for like caving and stuff. Maybe I'll whip one of those out. Yeah, Niphar, really, really good point. Some useful stuff in there, but also some confusing bits, mate. Nonetheless, really appreciate your teaching. Look forward to more. Yeah, no, I appreciate that, mate. If you've got any bits you wanted me to dive more into, I'm live again tomorrow, remember, guys, so I can run through that. We can make it more of an education one, or we can do it as more as our regular Wednesday alt session. If you've got any questions on that, come and hit me up. Come and grab one of the free trials, come into the nest, come and grab the learning information there, come and hit me up on Twitter or on the streams, and I'm happy to go back into a lot more detail, all right? So I believe, oh no, YouTube user, sorry, may I ask when is your regular stream, days and times? Yeah, of course, mate. So I'm on Mondays and Wednesdays at midday. We had technical issues yesterday, so I'm pumping onto this. But over the next few weeks, I'm probably going to try and get a couple more in there as well. So I normally announce it on Twitter. You can take a look at that. That's my handle on Twitter for anyone that's interested. And my streams always go out and get announced on there, but always Monday and Wednesday at midday UTC. Can't seem to DM you on Twitter. Ping me one over, mate. I'll get it. Sorry, I get like a lot of requests in there. It makes me say everything. Most of them are spam, obviously. But yeah, ping me one over, mate. I'll take a look. And I think I have to authorize it under Twitter Blue now in terms of getting it in. But do ping me. All right. Awesome. Look, guys, I'm going to leave it there. 1 hour and 21. This was exceptionally longer than I intended it to be. But I hope there's value in there. Do watch it back. If you've got any questions on what I do or any other thing that's on there, do come and hit me up. What I would say is my real takeaway from this is just make sure you're looking at your high time frame. Yeah. Look at where you believe price is moving, right? If it looks like it's moving towards a key liquidity lower down, then wait, be patient, drop onto your hourly chart, look at the structure, find your key inefficiencies where price can return to. Then when it gets to that area, move to a lower time frame and wait for price to show you that it's ready for move. Wait for that breakdown, wait for that sweep, wait for the displacement, right? Wait for it to, look, price just isn't ready to move here. Yeah. Fine, we've swept a high, but look, it's just kind of come down there, hasn't really taken out a low. Here you've got a punchy move lower, so I would be interested in getting into this. But then when you look at these bigger moves, right, you look at the ones that leave the displacement, that low is taken out, big move, fair value gap, monitor price in there. If you get that breakdown pattern, then give it a go. It isn't financial advice, guys. Obviously, I have to say that I don't intend any of you to go out and start trying to implement this. Hopefully, it provides a bit of learning that you can look to expand out on. And I hope that's useful. All right. At least I can try and make us laugh as well. We give advice. Mate, I've got a very fantastic group. You're a very, very welcome addition to it. I've got a lot of people that are really, really keen to learn, a lot of very good souls in here. We get very few trolls, thankfully, although they do pop up from time to time, but they go away pretty quickly after I've rambled on for about 1 hour and 40 minutes. So, look, guys, it really is a pleasure to do this review. I'm going to be back tomorrow at midday as well. So if you've got anything, hit me up on Twitter if you've got any requests or anything you want to take a look at, and I'll ping that on there as well. And then aside from that, I look forward to seeing you tomorrow. If not, I'll catch you guys around the nest out on Twitter, and I'll see you again on Monday. Have a fantastic week, everyone, and I'll see you tomorrow.